Hello, everybody. I welcome you all to our channel, Accountancy Bridge Coach. And today we are going to learn about accounting equation. So, before learning into what is accounting equation, do not miss to ask these two why questions, which is very foundational so that you get your concepts right. You all would be aware of what is the accounting equation, right? Accounting equation is nothing but assets equal to equity plus liability. So, this is the accounting equation which you all would be aware of. So, how did this accounting equation come into picture? The basis is we are following dual system of accounting. That is why we are following this accounting equation. So, this is the basis for all the accounting journey that you would be going through, like right from journal, ledger, trial balance, and balance sheet. Now, these are the two fundamental questions which you need to ask. First one is why books of accounts are maintained. So, the number one reason is to track performance. When we say performance, it is nothing but to know whether the business is doing a profit or loss. And the next reason why we are maintaining the books of accounts is to compare with the prior year performance and to compare with the performance of the competitors. Okay. The next reason is the funds for running the business is being contributed by the shareholders. So, preparing books of accounts is needed to know whether this funds is being properly utilized and managed while running of the business. Finally, the fourth reason being whether the entity is progressing towards the goal of the entity, whether the entity is actually moving towards the goal, right? What could be the goal? Primary goal would be whatever the business the entity is undertaking, the byproduct of doing the business is profits that it is generating. So these are the reasons why we need to maintain the books of accounts, and because of this reason for maintaining books of accounts, the next question arises of preparing the financial statements, right? So in financial statements, in the balance sheet, you would see that left hand side you see the equity and liabilities, and right hand side you see the assets. So the basis for this balance sheet view is also once again the basic accounting equation which we are about to learn. But why is that equity in liabilities is on the left hand side and assets is on the right hand side? This is just an incidental question that we would get while learning the about the financial statements and balance sheets. So when we ask this question, let's see who contributed the funds for running of the business. Who is it? It is the owners who are the primary users of the financial statements. So, whenever we are preparing the financial statements, it is being prepared for giving them a view on how the company has performed. What the owner has contributed is nothing but the sources of the funds. That is what we show it on the left hand side of the balance sheet, that is equity and liabilities. So, for running of the business, it is partly funded by the owners of their own funds and partly by the banks who lend loan for running of the business. So, the left hand side predominantly tells about what is the source of the fund for running the business. However, whereas on the right hand side, which is the assets, it tells on how this fund is actually utilized. That is, whether it is being invested in fixed assets, stock, cash, bank, and so on. So that's how all these are categorized as assets. So this source of fund is how utilized for in running of the business is what is shown on the right side. That is the assets, which otherwise can be called as utilization of the funds. Moving on to the accounting equation, equity plus liabilities is equal to assets. So now what is this equity plus liabilities? It is nothing but whatever funds the whatever is the entity owes to the outsiders. It could be either outside third parties or it could be to the owners of the company or the entity. So whatever the entity owes to others is together put together as equity and liability. And on the right hand side, you have the assets. What does it mean? Whatever the entity owns, which it possesses in its own name, is the assets. We will be learning the explanation or definition for each of these terms in detail in the upcoming slides. Like how even science says that every action has equal opposite reaction, in accountancy we call it as every debit has a credit, which means that a debit is like nothing but an opposite of a opposite side of the credit, right? So what we see is whenever there is an increase on one side, you see the increase on the other side. This is what makes the equation to balance, correct? you can assume this equation as a balance where you put vegetables on one side and the weights on the other side, and it needs to balance. So similar way is how the equation has to balance. So even in the money concept, when we see, we pay money to the shopkeeper, and on paying for the payment of the money we get the goods, right? Similarly, for every transaction goes through this concept of dualism. So when we see that apply this concept of dualism, that is nothing but the dual concept of accounting, we have found this equation of equity plus liabilities is equal to assets. So let us now understand what is equity. It is nothing but the funds which is contributed by the owners. I hope this is clear. Next is, what is assets? Assets are nothing but whatever the company or entity owns, and something that gives cash or benefit in future is what we call it as assets. How about liabilities? It is nothing but the entity needs to pay to that extent to the outsider. It is liable to pay. That's why it is a liability. That means it is due to pay to the outsiders. It could be either borrowings, or it has purchased something for the business on a credit basis for which the payment has not yet been made, or it has liable to, it has got services from the employees but the salaries are yet to be paid to the employees. So that is also an example of a liability. So now we have understood on what is a liability, what is an equity, and what is asset, and how this equation is balancing. But now let's ask the next question on why equity plus liability equal to assets, and why it can't be the other ways around, right? Okay, let me give you an example. Business is being started by Vakul V by investing his funds of 50,000. So what is this 50,000? This 50,000 is nothing but whatever the funds which is contributed by the owner into the business. So this is a transaction that has happened. So let us picturize this transaction. So V has contributed cash to the entity. For the contribution of cash, what is the entity giving to V? It is giving an ownership. The entity is liable to pay this funds which it has borrowed from V. So once again, we have business separate entity concept, right? So owner is different from the entity. So even in case of a sole proprietorship, the owner is different from the entity. Though the owner is unlimitedly liable, the owner and the entity are two different entities, two different as such. So when V has contributed capital to the entity, V has paid cash, and the entity is liable to repay this cash to the owner. Now in the books of accounts, the what are this dualism arising out of this one transaction is: one, cash is received by the entity for which it is liable to pay to the owner. So one side cash is being received, the other side equity is arised. That means capital, which is nothing but the entity has to repay this amount to the owner, which we call it as equity. So this dualism, can you see this dualism in a particular transaction? This is what happens in every transaction that we see. It goes through this process of accounting equation of equity plus liabilities is equal to assets. I hope this is clear. Now let us see the subclassifications of the assets, equity, and liabilities. So assets is nothing but a broader categorization name, but assets has various subcategories as to it could be a fixed asset, stock, it could be debtors, prepaid insurance, as such, cash or bank. So any of the transaction which is with respect to all these line items would be on the left hand side of the equation, or the one side of the equation, that is the assets. When it comes to equity, equity is mainly the capital which is being contributed by the owners. So this equity is being adjusted by any transaction which is impacting profit or loss to the business or drawings. So these are the three major adjustments which happens to equity. And when it comes to liability, once again, it could be anything which the entity is liable to pay to the third party. So it could be a bank loan, it could be creditors, or any expense payable. All these categories are classified under liabilities. The concept which we need to remember is the impact on the asset side should always be equal to the net impact on equity and liability. So whatever is the impact on the asset side that has happened, should be equal to the net impact on the liabilities plus equity. Only then the equation would balance, right? So if there is an increase in the asset, then on the left hand side of the equation there is an increase in the asset, then on the right hand side also there would be an increase, there would be a corresponding increase. If there is no change on the asset side on the left hand side of the equation, then even on the right hand side there should be no change in the equation. Now let us move on to the four main scenarios that would get covered. Like whenever you are solving a problem of accounting equation, there are four main scenarios that would arise. It would be either your asset side and the liable, your left hand side and right hand side of the equation has no impact. Okay, that means whatever is the whatever is the impact of the particular transaction is being added and reduced in the one side itself, so it has no impact on the other side. Or it could be an increase on the both sides of the equation, or it could be a decrease on the both sides of the equation. These are the four main scenarios that could happen that you would be tested in this problem of accounting equation. Now let us see. First one is purchase of furniture. What happens when in case of purchase of furniture? Furniture comes into the business, so there is increase in the furniture value and it is paid by cash, so cash reduces. When you see in this example, there is increase in furniture which is an asset, decrease of cash which is again an asset, so there is no impact on the asset side, hence you won't see any impact on the equity and the liabilities. Next transaction is capital contributed, where you can see that there is increase in the capital, which is on the right hand side of the equation, and there is increase in cash, which is the asset side. So now you can see that the equation as such is added on both the sides of the equation. There is an addition to the value. Third example that I have is withdrawal for personal use. So one side it is nothing but drawings. So drawings is nothing but a reduction of equity. So your equity reduces, and on the other side you have your cash getting reduced because it is being withdrawn from the entity. So you can see that there is a minus, there is a reduction on the asset side, and there is a corresponding reduction on the right hand side of the equation as well. Now the fourth scenario is where you have no impact on the net impact on the right hand side is nil, so you won't see impact on the asset side like the left hand side also. So it is nothing but the transaction is salary outstanding, where you see that salary expense. So whenever it is an expense, right? An expense in a profit and loss account, what happens? It reduces your capital. So there's a reduction in the capital and there is a liability because it is not yet paid. So salary outstanding, which is an increase in the liability. You can see that the equity has reduced, but there is a corresponding increase in the liability to the same extent. So in the net impact on the right hand side of the equation is nil, so you see that the left hand side of the equation is also nil. So these are the four major scenarios. I hope the topic of accounting equation was clear. If in case you have any queries or doubts, you can post them in the comment section. See you soon in the next video. Thank you.